All right. Welcome to episode 43 of the Jake Blanchard podcast. We're brought to you in part by our friends at Fellowship Brand Premium Men's Grooming Products. Use JBP at checkout on your first order. Go check them out. Fellowshipbrand.com. Premium Men's Grooming Products. My guest today, Bridger Pennington. Bridger is the founder of 3 investment funds. He's done over 300 deals in the last 3.5 years. He has started helping others launch their own funds through Investment Fund Secrets, an online program that he started so that people that aren't working on Wall Street or don't have Ivy League degrees can get started in this space and generate and create and grow wealth. It's super exciting. Bridger has spoken on stage in front of thousands of people across the US and has a mission to help entrepreneurs scale their businesses through their own funds. You can find him on Instagram at Bridger_Pennington. Bridger, welcome to the podcast, my man. It's nice to meet you.
Jake, good to be on. I'm excited to be here. How's it going?
It's going good, man. And where are you located again? Remind us where home is.
Salt Lake City, Utah, born and raised. If I was able to do funds in Salt Lake City, Utah, you can pretty much do a fund anywhere on the planet. So that's all I'm going to say to kick today's interview off. But I love Salt Lake City. I know you're in Boise and I love the Mountain West area. I love it here. It's awesome. I love skiing, mountain biking, all that kind of stuff.
Yeah, for sure. A lot of growth. I think that's one of the things that Boise and Salt Lake have in common. Interesting tech companies have kind of planted flags, at least with second offices. But yeah, a lot of people moving to Salt Lake, Boise.
I think I saw it was Idaho and Utah was for net growth, like as a per capita index, the 2 fastest in the nation. This is probably gonna be wrong, but I thought it was 12 or 13% of the people that live in Utah today did not live here 18 months ago.
Holy smokes.
It's crazy, right? And I think Idaho is about the same right now. We are having an X from these metropolitan areas and California, New York to a lot of states, and we're getting a lot of growth. So it's fun.
Heck yeah, man. Hey, let's go ahead and get started. You're in the financial business, man. And what got you started? What interested you in finance? Was this something that you grew up into? Your family was interested in this market space? Is this something that you kind of found along the way? Tell me about this whole obsession with funds.
Yeah, my story I grew up in a very average house, I guess you'd say, middle class. My dad was an entrepreneur. And so I saw him be an entrepreneur. He started a bunch of different businesses. We had feast and famine, like a lot of entrepreneur families have. And it put into a spirit of me of work though. And I knew, and I saw what could happen in entrepreneurship. And I was very excited about it. So I got into college and I was very ambitious. My first 2 years of college, I started 6 different ventures. I started an online Chinese tutoring business. I started, I built websites for people. I was doing essential oils. I was flipping houses, like wholesaling houses, anywhere to make a buck. If it was on YouTube, I found it and I was trying it out. Drop shipping. I mean, we tried everything. And I actually made a little bit of money in college and I was just kind of like a chicken with my head cut off. And finally my dad, who's my greatest mentor, you'll kind of hear about him in a minute, but he grabs me by the ears and he goes, "Bridger, you're kind of like a chicken with your head cut off. I want you to go meet with my business partner. I think this guy can really help you out and give you a little bit of direction." So I said, okay, set up the meeting. I drive to this guy's house. I come through a gated community. I'm like, who is this guy? It's a really nice area, beautiful mansions. I pull up the street to the top of this beautiful hill and there's this gorgeous white mansion on the top of the hill. And I have to double check my phone. Is this the spot? Who's my dad's business partner? Who is this guy? And I pull up, park my car, I get out and I'm a little nervous. I'm like, I don't know who this guy is. And I walk up this beautiful house. I knock on the door and I'm a little nervous. I think a butler is going to come and kick me off the property, right? Be gone, peasant, get out of here, right?
Yeah.
And I'm a little nervous, Thankfully, my dad's business partner answers the door. He says, "Bridger, come on in. I've been waiting for you." He brings me into his beautiful house. I mean, there's the wine cellar, the grand piano, the pool in the backyard, the basketball court in the basement, all the nice cars. I mean, everything, right? We sit down on his big white couches and we start to chat. And we start talking about business and real estate and all this kind of stuff. And finally I get to the point and I say, "How did you get all of this?"
Yeah. Great
question. How did you do this? Right. I kind of just pointed at everything. And he goes, "Bridger, it's funny. Not very many people ask me that question." And I was like, "Oh shoot. Sorry. I don't know if I offended. That's the only question I had when I came was just how," and he goes, no, it's fine. Let me tell you. And he goes, when I was in my 20s, I was a lot like you. I started multiple businesses. I actually was moderately successful. I did actually decently well. And then he goes, then I figured out the secrets of the ultra, ultra wealthy. He goes, this is what the ultra wealthy families of the world do. He goes, they all work or run in the fund space. A lot of them have their kids. They want them to go to the top tier schools. They want them to go investment banking, consulting, and go work in private equity, hedge funds, venture capital, or come back home and run the family office. And he goes, I met a gentleman who ran a private equity fund. He was one of the wealthiest people I'd ever met in my entire life. And he said, I didn't even know what a fund was, but I'm going to figure out, I don't care if it takes me 1 year or 5 years or 20 years. I was going to figure out what a fund was, how this whole world worked of high finance. And to kind of just pause on the story for a second, to help people know, I'm going to use the word fund a lot today, probably. Yeah. When I say fund, all I mean, and the most basic term, this is what he taught me too. He says, Bridger, all I mean when I say fund is all a fund is a pool of money. Investors put money into that pool. And then me and you as fund managers can draw from that pool and go make investments. And when those investments make money, they come back to the fund and then they get split between the investor and the fund manager. So a real estate fund, all they do is they go buy and sell real estate. A private equity fund, they buy private interests or private equity in private businesses. So it's the same pool of money. They use that pool and they'll go buy, last year, Victoria's Secret almost got bought out. Sephora. You see these huge transactions where they'll go buy private stakes in businesses. Okay, that's private equity. You hear venture capital, same pool of money. They're just investing into small startup companies. Hedge funds, same structure. It's exactly the same. They just use that pool to go trade public securities. They're trading public stocks and bonds and Forex. Okay, that's it. They're all the exact same structure. And this is how some of the wealthiest people on the planet make their money. If you look at the Forbes 100 list, it is riddled with fund managers because it's such a lucrative business opportunity. And so he said, Bridger, this is, and back to kind of the story, I'm at this guy's house and he goes, Bridger, me and your dad about 8 years ago, we launched our first real estate fund and we currently manage about $8 billion of real estate. And to put that into perspective, you guys probably have all seen Grant Cardone, right? Online.
Oh yeah.
Cardone Capital, they manage about $2 billion of real estate right now, multifamily. At the time, my dad and his business partner, they're running $8 billion of multifamily real estate. Today, they're well over $20 billion of real estate they manage. And I was blown away. I was shocked. I was like, wow, this is incredible. I said, I want to run a fund. That sounds amazing. And I said, hey, and I've always heard you got to find a mentor. That's it, right. Everyone tells you that, find a mentor. So I said, hey, can you be my mentor? And this guy's rich. Can you be my mentor? He goes, Bridger. He goes, don't talk to me. Go talk to your dad. Your dad, he knows way more about this. And I said, no. Like my dad, we live in an average house. You're obviously very wealthy, very rich. Can you be my mentor? And he goes, Bridger, sorry to break it to you, but me and your dad make about the same amount of money. Wow. And my chin about dropped to the floor. I was like, huh? I was like, come again? He's like, yeah, we're pretty much equal business partners. And I left this dude's house. I drove straight to my dad's house. And I was like, Dad, what the heck? Like, what's going on? Like, you've got all this money and you're not spending it. Like, why? Like, why have I not been able to order a soda at Chipotle for the past 7 years because it's too expensive? Like, what's going on? And anyways, long story short, he lives and still kind of does the Millionaire Next Door lifestyle. If you ever read that book, it talks about there are millionaires that live in your neighborhood, just average, and they like to save and invest their money. They're not flashy. They're not spendy. Yeah. And, but yeah, he was running at the time an $8 billion real estate fund. And so I, over the next year, was able to sit down with him on a whiteboard and learn directly from him how funds worked, how they were put together, how they were structured. And it blew my mind how much capital and how high finance works. And I was very intrigued. And sorry, you can cut me off whenever you want, Jake.
No. I'm fascinated by this. I'm fascinated by the mindset of your father. I think that's more and more rare these days, but more needed is that humble savage, that person who's just getting after the business world. And then, like teaching you some really important lessons, really important values about money along the way. And now you walk into this door, right? Small hinges swing big doors. You have one conversation, you walk into that door, and then the whole perspective changes. It's awesome.
100%. And to give my dad credit too, after all of his kids moved out of the house, he went and bought a huge house and has nice cars and stuff, everything now. Yeah. But at the time growing up, he wanted to teach us work and how money worked and all this kind of stuff. So anyways, my dad teaches me this. I understood what funds were. Yeah. And I went out and started to look for a potential opportunity to start my own fund. I'm 22 years old at the time. I'm working at a company. I'm in school and working at the same time. And I found this great opportunity. I was at a company I was working at where I could lend money to some of their clients. And I talked to the owners of the business. They loved the idea. I said, hey, we could do a fund. We could lend money to these guys. It'd be awesome. I talked to my dad. He loved the idea. I said, great, I've got a fund idea. I'm going to go launch a fund. And we're going to do these small little micro loans. They're $2,000, $5,000 loans or teeny. And we're going to start this thing. And so my dad sat down with me, greatest mentor ever, and helped me think through everything, put it together, structure the whole thing, love the idea. And for whatever reason, I kind of overlooked the one of the biggest problems with a fund or starting a fund is finding capital, is finding the money, right? The investors, for whatever reason, I just didn't think about it that much. I just thought it would happen. And I sat and I got our whole fund put together. I got my pitch deck, all this kind of stuff. And I thought, aha, my dad is rich. He doesn't spend his money. He likes to invest. He would probably love to invest in my fund. And so I remember it was a late Sunday night. I decided I was going to go pitch my dad and ask him for money. And so I walked into my dad's office, home office. We sat down, and in my best pitch voice possible, I said, Dad, how would you like to be our first investor into this fund? And he kind of laughed and he goes, Bridger, I have the money to invest and I love your fund. But if I invest in your fund, I would ruin the experience of you raising money on your own.
Wow.
This will be a crutch that you can never recover from. Your first investor is your hardest investor to find. And if I take that spot, you'll never recover from this. And he said, no. And he kicked me out. And he said, you need to go find your own investors. And it was a big, tough love moment between me and my dad. And I left his office kind of with my tail between my legs a little bit. And I went out and I took him up on the challenge. And I went out, hit the streets. I talked to everybody I knew. I mean, I was pitching to everybody. And after 4 or 5 weeks, I raised a whopping $49,000 from like 6 different investors. So teeny micro fund, like nothing, right?
Yeah.
Probably one of the smallest funds ever, but it was enough to get started. And we launched our very first syndicate fund kind of thing. And we did these micro loans, and our first investors got a 64% return on their money. We gave them all their money back. It was awesome. Since then, we launched our second fund, which was actually more legit. And we raised and deployed millions of dollars on that second fund. It was awesome. And then right now we're launching a third fund, going out and we're actually switching theses. We're doing real estate. We're actually going to go buy big box stores. We've soft raised about $18 million for that fund. Anyways, so we're growing there and doing fun. But that's kind of how I got started in this game and done that. So then along the way, you mentioned investment funds here at the beginning. So I run these funds. My dad obviously runs these multi-billion-dollar funds. My brother is a securities attorney. So he does law for funds.
Okay.
And none of us, it's like this perfect trio. Like none of us went to Harvard. None of us did the Ivy League route. None of us did the Wall Street route. And we've had lots of people reach out to us. How did you guys, all three of you, get in the fund space? And so we decided to put together investment funds here. It's essentially just to pull back the curtain and let more people know about this amazing world of funds. And that regular people like me and you can go launch very, very lucrative funds and get them off the ground and scale them and make a ton of money. It's a really fun thing. So that's kind of why we've transitioned to that, and we do both now. So. Okay.
That's a lot. That's a lot there. So like 3.5 years, like what was the hardest part about finding that first investor? I mean, tell that story. Like, was it that grind to go find it, or did you have somebody else in mind when you walked out of your dad's office? Like, what was that like?
Well, 100%. Yeah. And it's, and you talk to anybody that's ever raised money before, it's always a total game of how you raise money, how you find investors, how you find capital, and finding the right investor that's good for you. So I went out, I talked to a number of, when you're raising capital, I talk to my dad or anybody, they always say the same thing. Just talk to everybody. Tell anyone you know that you're in the game, that you're raising, that you're doing this awesome deal. You don't want to be annoying about it. You don't want to like pitch everybody, but just let people know hey, this is what we're doing. This is what we're going after. This is my vision. This is my dream. And you'll be surprised about how many kind of word of mouth spreads. Most funds, by the way, you cannot publicly advertise your fund. That's why you don't see billboards for Blackstone or KKR, these massive multi-billion-dollar funds. Because of their SEC filing, they literally cannot advertise. It's against the law to advertise. So you have to raise money by word of mouth. And so I went out, talked to a number of different people. I think I got a few people to bite, and it was more of like, Bridger, we'll throw $5,000 at you or $10,000 at you. Like, you're a nice kid. Almost they were investing, just believing in me, essentially. Hey, I'll believe in you. We'll give you a little bit of money and we'll see what happens. And I said, great, I'll take whatever I can get. And so we started very, very small, but we got a good return and good track record and things like that. So it was, it's quite the process. Still, I'm in the same spot right now. We're raising capital and now it's at a different level where we're not asking for $5,000 checks. We're asking for, $250,000 checks, $500,000 checks, $1 million checks right now in our fund. And so that's where we're at.
So, and you touched on some definitions earlier, right? So you defined, a fund, and then you talked quickly about private equity, hedge funds, real estate funds, debt. So I think the thing that a lot of people get confused about are hedge funds. You mind just unpacking what a hedge fund is a little bit? You see it in the news. Yep. I think the biggest news lately was what was that company, like GameStop or something like that? It was short selling through a hedge, something by the way, I'm swimming in the deep end a little bit in the financial space, but maybe you could explain that a little bit for the listeners.
Yeah, 100%. I know GameStop, you had like Melvin Capital, right? They a huge short position on GameStop, meaning they were betting the stock would go down, and they have billions of dollars to play with because they set up a fund. And so now those are, by the way, those definitions, private equity funds, venture capital, hedge funds, very broad. Those are very broad pools. That's kind of like saying tech companies, retail stores, what's another, I don't know, brand, online stores, right? They're very broad, and then you can get into the weeds of them. So hedge funds in general, the broadest scope, they are trading public security. So anything public. If you have a public stock, Apple, GameStop, anything on the public markets, they are going to trade those. If you have, they can trade Forex, which is foreign exchange. So currency. They can trade cryptocurrency, so Bitcoin. I mean, they can do a lot of things. They can trade bonds and options and all sorts of crazy detail weed things. So what they'll do, that's the broad sense. And then most groups will come down and target a few different things that they're going to get really good at. So you see a couple of these funds that are really good at shorting stocks. So back to the GameStop, right? I don't know Melvin Capital's entire thesis, but let's just go with it as an example. I'm guessing their thesis is, hey, we've got a couple $1 billion in a fund. We are only going to go after companies that we're going to do a ton of research on, and we're going to try to price a stock. And if we think it's overpriced, we're going to take a short position, a negative position against it, and we're going to make money. And a lot of actually these companies that do short positions, they also will do a lot of research. There's one that did this too. What's the name of that company? They do Nikola. The electric cars. This happened to them back in November. Hedge fund came around, and what they do is they'll take a short position and they will publish an entire paper on why this company is fraudulent. So that other investors can read it. Now that's a risky game, because if they publish something that's not true, then they're going to get hit with a huge fine, because you can't just go, tarnish someone's name, make their stock drop, and then you make a ton of money. So it has to be factual. So they got to do a ton of research with Nikola. Yeah. They went out and said, Nikola's trucks actually don't drive. And Nikola was putting out all these videos of self-driving and electric vehicles, and they would call it Nikola in motion. And what was happening, at least from the paper, they had like a hill, and they were pushing the truck down the hill, and the truck was in motion, right? But it wasn't actually driving. And the way they shot the cameras, it looked like it was driving, all that kind of stuff. And they came and published this paper, and I was long, but this is me just being transparent. I had a decent position in Nikola. I'd bought some of their stock, and I thought this company's going to take off, and they published this paper, and the stock drops in half. Like the first day, it drops another half like the week later, and it's down. I think it's like around $10. It was at like Yeah, I peaked at like $60 a share. Now it's at like $10 a share. So that's to unpack hedge funds a little bit. They all have different strategies that they go after. That's one strategy. Other, you see other big firms that'll buy big positions in companies they believe in, and we'll ride that. Like you see a Warren Buffett. They technically don't have a fund, but they'll buy positions in Coca-Cola, Apple, and just they believe in the long-term growth, fundamental investing. It's a totally different strategy. You guys have guys that do options. You have guys that do cryptocurrency. I mean, there's a whole plethora of different things, but that's what a hedge fund is in general.
Yeah.
And typically you'll have just a few more things. You'll have these big names, hedge fund managers, George Soros, Bill Ackman, that you'll hear on CNBC or the news. A lot of the times, those funds, you're really investing with Bill Ackman. You're just saying, hey, Bill, take my money, whatever you want to do with it, like go ahead, as long as it's public securities. And so some firms will have really broad scope. They can pretty much do whatever they want, like a Bill Ackman. He can just kind of decide, yep, I like this trade. Let's do that. Most funds that are hedge funds have a very niche strategy. We have 2 guys in our group that just launched hedge funds. One of them just trades like Bitcoin and Ethereum. That's all he does. Another one just trades, I think it's like the Australian currency versus the US currency, the dollar versus the euro. That's it. He's not allowed to trade other things. It's that specific. So you get a broad range. Is that making sense, Jake?
Yeah, absolutely.
Sorry if that maybe was a little scramble. That's kind of an overview of hedge funds. And so they, the last thing I'll say too, why do people invest with hedge funds is active management. You are hiring a team to actively manage a fund and portfolio. If you look at 2007, 2008, 2 sectors that I know of were not really affected. Number one was emerging markets. So emerging markets in general just weren't really affected by the global financial crisis that much. So like South Africa, Nigeria, India, some, parts of, these emerging markets. The second was hedge funds. Hedge funds really performed very well during that time. And they've become more and more exclusive. A lot of these big funds, you see Ray Dalio's funds. You cannot invest in Ray Dalio's funds unless you have a $5 billion net worth. Minimum check size is $100 million. If you can't meet that requirement, you cannot invest in his fund. That's the type of exclusivities a lot of these big hedge funds have, and a lot of them are closed. Like you just can't get into them. I'm trying. Jim Simon's another one. He has not let new investors in for like 11 years. They have managed like $300 billion. They just don't let investors in. So wow, it's crazy. That's the world of hedge funds.
So what kind of so you launched this program, this investment secrets,
investment fund secrets. Yeah.
Excuse me. And the have you gotten feedback from Wall Street or some of these folks who see that and try to, I don't know, discredit it? Because that's surely a threat, I would think, for some folks or some of the kind of the major labels, major names, for people to become self-starters and have all the tools and have all the information. It kind of commoditizes all that Ivy League information that we talked about earlier.
Yeah, 100%. And the answer is yes. Yeah. And that's what we wanted. We wanted to make something that was kind of controversial, that was going to cut to the core of, yeah, you guys, other people can do this. It's not reserved for the elite, elect, whatever you want to call them. This other regular people can do this. And we've had a lot of kickback first off on, can people actually do this? Right. We've had a few folks, really nice friends of mine, say, Bridger, this is a bunch of BS. Like there's no way regular people can do this. We launched this program just over a year ago. It's actually very new. 13 months in, we have one fund that has already raised $500 million for their fund. And they just sent me an email the other day. They have commitments to go to 1.2 billion in 1 year. That's what they've raised. Wow. They're doing really incredible. We have another group. We have, I think, 6 more companies that have raised over $10 million in the last year for their fund. And they're doing extremely well in all different asset classes. We have guys they're buying and selling funeral homes. That's all they do. They literally have a fund that goes and buys 6 or 7 funeral homes, mom and pop funeral homes every year for like $7-8 million. And they can sell them for double to a bigger firm. So every year, I have a buddy, he spends $8 million, sells that group for $16 million a year later, $8 million profit. He splits that with investors. He probably makes $1.5 to about $2 million a year. That's it. That's all he does. Another friend goes out. He's actually in our program. He's raised about $14 million. They buy old mansions, huge mansions that are kind of run down, fix them up, and they put senior assisted living in them. They put 15 beds in there. They have great nurses that come in. Old people like to live in a home versus like a big kind of corporate building.
Yeah.
And that's their entire thesis. Really cool. Solar farm funds, people that they buy scripts on Hollywood and they go sell them to HBO, Netflix. I mean, there's a lot of niche funds. And I think the proof's in the pudding. We've had so much success in such short period of time with people's funds. It's been amazing. The second kickback I get from people, and this is the majority, is there's no way you can do it the way you're talking about it. And this always comes from people that have never started a fund. People that criticize our program are these blog writers and other things. These people have never, ever raised $1 of capital, never started a fund, never played in the space. And because they haven't, they want to shoot us down and say, you guys can't do it. There's no possible way, blah, blah, blah. And we're like, well, okay, just look at the results, right? Look at the results, and the results speak for themselves. So that's where we've seen it. But to be honest, though, not that much kickback. It's been a really fun thing, and it's been awesome. Most people just say, Bridger, I've never even thought this was in my scope. I never thought starting a fund was in my scope of power that I could do in my lifetime, and that's what we're helping people do.
And then what are the most common misconceptions here for people? I mean, you talked about a little bit of the industry pushback. You talked a little bit about individuals saying, well, I don't know if I can do this, whatever. But when people get started, when they actually get started, like what is the barrier that breaks and they're like, oh yeah, I can totally do this?
Yeah, the first thing, and the analogy I use, this helped me a lot, because when you talk about funds, there is a lot of compliance. There's a lot of regulation around funds. You've got to follow the SEC. You got to have sometimes certain licenses and all these certain things. And most people, myself included, when I first learned about this, I just kind of thought, I don't want to deal with that. It just seems like so much red tape. I'd rather just go start a Shopify store and just do that, you know? And the analogy that helped me was American football. So imagine you came into a football stadium, Dallas Cowboys stadium. You've never heard of football in your entire life. Okay. Never. And you walk into a stadium, you sit down and start to watch the game. I bet after 30 minutes, you would probably be pretty confused. Maybe a little like, what's a fourth down? Why are they kicking a field goal? What's a punt? Offsides? Like,
yeah, the strategy
holding,
of the game.
Like,
you're only seeing tactics, but you don't understand the strategy behind it.
Exactly. And you're like, what's going on here? And you'd probably be pretty confused and want to leave, right? This is dumb. I'm out. But if you went to that same football game and you sat down next to an expert and they could sit there and teach you, hey, this is what a fourth down is. Oh, this is why they did that play. And this is what a field goal is. This is how the scoring works. You might, after 30 minutes, actually like the game, number one, and you might be able to develop even a little bit of your own strategy. Yeah. And it's same amount of time, but just having a person beside you teach you that. And that's the same thing that happened for me. Most people watch the news. They have no clue how hedge funds, private equity, it's just this world, and they're not going to learn it, and just it's out there. But when someone sits next to you, like we've done with our pro, like my dad or my brother or myself, and we teach you about funds, yes, there's rules, but they're not that crazy. It's not, yes, there's rules to follow, but it's not as complicated as you think. And most people that come into our programs and stuff, they go, oh, it's actually not that hard. Like there's a few things, but oh, I get it. And now they can start developing their strategy within those rules of the game. And we teach them about what licenses they need or don't need. A lot of funds you don't need. I actually don't hold a license right now. I run 3 funds. Do not need a license in my funds because of the way I structure my funds. Some funds you might need a license. A lot of them you actually don't. And so it's really when you come down and have someone besides you to teach you the rules of the game, it's actually not that crazy. But I would say that's the first breaking point. People are like, it's like, oh, it's actually not as crazy as I thought. And I can play in the space, and there's a lot of money. There's a lion's share of money here to take. And it's pretty impressive.
I was going to ask, what's the biggest, the landmine? What's the one that when people aren't successful, 80% of the time, it is what?
I would say and first thing I want to say with funds for people that are listening, this is not like an easy, go do this on the side, make $3,000 a month. This is not that. If you're looking for that, go do something else. This is for people who are serious, that want to take someone else's money and manage someone's money is a big deal. Okay. It's a big deal because you have a fiduciary responsibility to someone. You can't just quit. You manage, $1 million or $5 million or $10 million. You can't just one day say, well, I don't want to do it. Like a Shopify store, you can just wake up one day and say, well, let's just turn off the ads. We're done. This is a little bit different game. I would say though, back to your question of what's the biggest, landmine for people, most people don't get started. It's because to get launched with the fund, there's a lot of steps. Again, I was using the Shopify store. To launch a Shopify store is actually pretty easy to launch. To make it successful is hard, right? Fund's kind of the opposite way. To launch a fund is decently hard. And then once it's launched, make it successful isn't that crazy. But the barriers to entry to launch is pretty hard. You have legal fees. Most people, it's $30,000 to $40,000 in just legal fees to set up your fund. And we teach people how to do it for a lot less. But typically, if you just went and hired a lawyer, they'd be like minimum $30,000 to start your fund. Finding the right partners, those investors, to bring those people, the people around it, and to get it organized together is the hardest piece of a fund. Just to get started, that is 0 to 1 is the big, and that's what we try to come in with and help hold people's hand of, no, you can do this. Here's the very next step in front of you to get all those things organized together. But I would say the biggest landmine is usually people. And that's what I tell people all the time too, is inside of a fund, there's 3 distinct areas of people that you need to have in your fund. And I'm gonna use my hands. That probably won't make sense, but I usually map it on a whiteboard, but this is what I'll use here. So for the first person inside your fund, it's kind of obvious. I call them the expert investor. This person is the geek that just knows stocks like crazy. They have the algorithms, the computers, they know real estate like crazy, or they're crazy good at trading cryptocurrency, whatever it is. They're the expert investor. They're incredible at that. Okay, that's the first person. Typically, that person has no clue how to set up a fund, which is the next step, or raise money, which is the other one. Okay. So first person is expert investor. Next group is what I call the fund manager. This person is really good at setting up funds, putting it together, the legal, compliance, regulation, rules, all that kind of stuff. That's the second person. And then the third person is called the money raiser. This person, very well connected, probably has a couple of billionaire friends, is a natural salesman, goes to all the networking part, all that kind of stuff, right? Is that person. And what I've found is typically those 3 people don't know how to do the other person's jobs. So to give you an example, back to my dad's funds. So they manage north of, like $1 billion fund, right? Real estate, mostly. My dad does not know that much about real estate. I ask him real estate questions all the time. He's like, I don't know. But I have partners who know how to do it. And so my dad, in those 3 circles, my dad was a fund manager, very good at legal compliance, regulation, all that kind of stuff. He went and brought on a couple of 3 guys that I think had flipped houses before, really good real estate guys, had done commercial properties, really smart, but had no clue how to set up a fund or raise money. And then he went and got another partner who had all these connections, but just didn't know how to use them. Just like, hey, I don't know. I have all these contacts. How do I use these contacts? And they brought them together and said, let's do a fund. And it was this beautiful marriage of these 3 groups. Now, in your fund, whatever you're doing, you can do 2 of the 3 jobs. You can do all 3 if you want, or a slice of one of the 3. It doesn't have to be 3 distinct people, but that's typically how I frame things out. So a lot of people, this happened to me like 6 months ago. I had a guy call me up, Bridger, I have like 3 billionaire friends. They love me to death. They only want to invest in my company and my thing. Can I partner with you on your fund? And I said, yeah. 100%. Yeah. I'll take 3 billionaires. That sounds awesome. And so I was like, yeah, let's partner. And so anyways, there are people like that out there looking for you. And so when people are looking in this space, like, I don't know if I can do it. That's the wrong question. It's not how, it's the who. It's not how do I trade crypto? It's who do I find that can go trade crypto or go buy businesses or find that invest these, or who can I find that can raise capital for me? And that'll answer 90% of your problems. And back to your question, what's the biggest landmine is people do not focus on the who as much and just bring on partners as well. So that's what I would say is, and that's what we help people do is we connect those people together and help funds get launched and scaled. So it's a fun game to be a part of.
Another area when we touched on hedge funds, we talked on getting started, that kind of stuff, crowdfunding. What an interesting concept this has been. It's existed for years and years, but the digitization of crowdfunding has really pivoted, and we see a lot of these kind of crowd fund websites, whatever. How does that apply to what you're teaching now? Like, are people starting their own crowd funds? Like, what's that like?
100%. Yeah. We actually have a section in our program all about crowdfunding, all about Regulation A funds, all that kind of stuff. And that's just a different type of fund. Crowdfunding is, you have Fundrise, you have a couple of these groups that do this. They in 2011 with Dodd-Frank, they kind of loosened up the rules and allowed these to happen. And so a lot of companies have come in and done it. Now, a few things with crowdfunding, just from a setting up point of view. The average investment on a crowdfunding platform is $250.
You need
an average investment. Okay. So if you're doing let's call it a million or $5 million project. Okay. Average investment is $250. You've got to have pretty good systems and compliance, and the SEC is going to regulate that more because you're getting non-accredited investors. You're getting regular grandma, money. And the SEC, the one thing, just for other note, the SEC hates more than anything when a slick talking fund manager goes and takes grandma's last $20,000 and loses it. The SEC is designed to protect the little guy. So typically in funds, my fund, I have to raise money from accredited investors, qualified clients, or qualified purchasers above. So these are people with a net worth above $1 million or $2.1 million. That's to be a qualified client. And that's a rule that I have to follow in my funds. Okay. A little side note there. We can talk about that more about, the differences of different types of investors, but crowdfunding allows you to raise from anybody. So again, back to the example, you have a $5 million property. You've got to over disclose to those investors. You have to have a really good accounting team and an audit team with you. And you're dealing with thousands of investors, maybe even 10,000 investors or more, depending on the check sizes, right? It's a lot of, and you've got investors that are going to call you up and, hey, I got to get my money out and pull it out. You usually have a lot of friction. A lot of funds that we work with, $5 million, we usually have about 10 investors or less that'll take that out. Maybe 15 investors. A lot easier. You can put that on one spreadsheet, right? Really easy to manage versus, 5,000 investors. They're going to take out that same chunk. So that's the I would say pros and cons. Really nice because you can just advertise, you can do whatever you want, but you've got to have a lot of good regulation. And usually the cheapest investors are usually your most difficult ones to deal with. A little story, at my first fund, when I was raising that $49,000, I had a buddy. He gave me like $3,000 as an investment. And I was like, okay, I'll take your $3,000. This was like on a Wednesday. I take the money. Thursday afternoon, he calls me, Bridger, how's the money doing? How's the fund? I'm like, dude, it's great. It's doing awesome. Don't even worry about it. Monday, calls me again. Bridger, hey, how's I got to pay my mortgage. I was wondering, is the money doing okay or can I pull it out? And I'm like, dude, it's only been like 5 days and you've called me twice and you're worried about your $3,000. I'm like, this is not worth it. Take your money back. You're not the right type of investor for this business. And I set him his $3,000 back. I just said, it's not, you're good. Just to keep it. Call me in a couple of years when you're in a better spot and you can actually invest. Yeah. You get a lot in a crowdfunding platform. You get a lot of those. You get a lot of those calls and things. And typically what I've seen, my biggest investors are usually the easiest to work with. My investors that write, $250,000, $1 million, $5 million checks usually are the easiest to deal with. They understand how investing works. They understand, yes, we could lose money. I mean, it's a way better platform and it helps me sleep better at night. If I'm going to lose someone's last $3,000, and that's always a chance, right? As a fund manager, you can lose people's money, right? That's a weight that weighs on your shoulder. And if I'm going to lose my buddy's $3,000 and he can't pay his mortgage or whatever, I'm going to feel awful. And that's going to really hurt me. But if I have a guy who's worth $300 million and he gives me, $250,000 and I lose it, well, yeah, he's going to be mad. But his family, they're going to eat the same exact food. They're going to live in the same house. They're going to take the same vacation. It's not going to change their life that much.
Well, and it's for folks with that much money, it's a diversified strategy, right? They're looking for lots of different areas of either passive or active investments. And, if they trust you, if they have a good rapport with you, if you put a good business case together, why not, right? Why not put that money to work? Because they're looking for that opportunity anyway. as opposed to
100%.
somebody who gets pitched on something that they weren't looking for necessarily. It's just, they know you've got a fund, you're trying to raise money. They're like, yeah, I could invest. I could be an investor. And they never really, they didn't develop the mindset. That's an interesting point.
100%. And that's why I mentioned this, or we can touch on this now, but that's why the SEC has come out and actually given different standards of investors. So you have non-accredited investors. Those are kind of everybody else. And then once if you have $1 million net worth, excluding your home, you make $200,000 a year or $300,000 a year with your spouse, you now are an accredited investor. And a lot of funds and investments will not take your money. They can't, by law, they cannot take your money unless you're at least an accredited investor or above. So, and a lot of people know that there's actually 2 groups above accredited investor that are even higher. There's another one called qualified client. You have to have a $2.1 million net worth, excluding your home. And then there's another one above that called a qualified purchaser. And you have a $5 million net worth, or you are an entity that has $25 million in assets. And there's a few other things that you can do as well. But that's kind of that. So you have a 1 million, 2.1, and a $5 million standard. A lot of funds, you'll hear somebody on CNBC or Bloomberg, they say, hey, we only take money from qualified investors. And you think that means accredited investor. It's not what that means. They actually only take money from qualified clients or qualified purchasers or above because of the way they filed with the SEC and the laws the SEC has. Again, the SEC doesn't like when a fund manager takes money from the little guy and loses it. So that's what the SEC will do to protect them. And so keep that in mind when you're looking at investments. And if you're in one of those levels, just that'll help people understand where you're at. And then running a fund, that's what we teach people too, is we teach people, hey, that yes, you can do crowdfunding. You'll get this group. You can do a Regulation D fund. There's all sorts of different types of funds that we teach and give people the options of what strategy to go for when launching their fund.
Yeah.
So,
all right. Hey, let's pivot a little bit.
Yeah.
You work with money all the time. You're out there teaching and coaching and supporting people who aspirationally are trying to work with money in the ways that you do. What do you do to stay balanced? Like, what's your activities outside of the investments all the time?
It's a good question. I love boating.
Okay.
So we go surfing, wakeboarding all the time. I love that. I love mountain biking. I love
you get down to Powell?
I live in Utah. Yeah. Oh yeah. We're probably have 2 Powell trips planned this summer that we're gonna try to get to. Lake Powell is so fun. My wife's family has a houseboat. They go down there every year, so it's fun. Yeah. Love that. I love to be outdoors and outside, be with friends and go to events and stuff like that. So anyways, I'm all over that scene. I played a lot of sports growing up, and now I'm trying to like keep that going, but there isn't like, a lot of things to do. So
yeah,
you got to transition other things.
I used to, every other year, a big group of friends, we'd go down to Lake Powell and just spend a week in the Escalante and just have fun, man. It's an unbelievable place to relax and decompress. I think that's an important part of this as well, is you can get stressed out. I'm all about balance. I'm all about kind of that work-life flow. And it's a grind, right? But you got to have those releases, those outlets. So that's good to hear as well.
Yeah. 100%. If people haven't heard of Lake Powell, go just Google it. It's the most crazy. It's like the Grand Canyon filled up in a lake, and then there's boats. It's like the coolest place. It's a really cool spot.
Especially on the Utah side, man, going out of Bullfrog and find your way into those slot canyons. It's incredible.
Yeah, it's fun.
And so what's next? Continue to grow funds. You're going to do more on the teaching side, coaching side. Like, what are you offering? Like, what is your services offering for people who are interested in learning more or potentially working with you?
Yeah, we offer for people that want to learn, work with us, whatever. We have a number of programs. We have a mastermind program. We call it our black card kind of inner circle coaching, where you work with me directly. That's kind of our top tier group. We only take a certain number of people in that one. We don't take so many people. Our mastermind group though is awesome. We have over 1,000 people in that group, and it's incredible. And we have a whole course, 160 videos, small, tight knit, 5-6 minute videos that teach you like little nuggets. We give you all the Excel documents, all that kind of stuff. So our goal is to help people launch and scale funds. That's our 100% goal. We help people connect each other. Those 3 circles, we're trying to connect people all the time. And we've had a lot of success out of our groups and programs. It's been fun. So I do that as fun. I like that kind of stuff. It's just fun for me. I think that's really fun. I love running funds. I love the money and the deal side of funds, but I really love working with people and running programs and stuff. We're hoping to do a big scale event here in the next year. So a big fund conference, get a bunch of fund managers and people, kind of like a funnel hacking live or like a 10X growth con, but just for funds. So that's our goal for next March. Actually, we're going to try to do that. So anyways, that's kind of the future of what we want to mainstream funds. We want to teach more people about this incredible world of how funds work, how they're started, and do that kind of stuff. So that's what we're looking to do. Perfect. And then right now I'm launching a new fund right now with 2 other partners, and we're doing real estate. We're buying up big box stores. So any old Kmart, Shopko, stuff like that, we're buying all those, renovating them, fixing up, and putting in all sorts of stuff in those properties. So that's the two things we're going after right now, and it's been really fun. 2 verticals.
You mean the giant buildings that are Spirit, the Halloween store for like 3 weeks out of the year?
We are buying up as many as we can get our hands on right now. So it's pretty fun. That's what we're doing.
That's awesome, man. And then the website again, bridgerpennington.com/IFS. Is there any other website that's good for people to go to? I can put in the link.
Yeah. Bridgerpennington.com is great, or investmentfundsecrets.com. So
perfect.
Or just, if you hit me up on Instagram, our link in bio, and you can just send me a DM and I'll respond to it. And that's where you can find people. So Bridger Pennington on Instagram is our place.
Perfect, man. Hey, I want to thank you again for carving out some time with me today, expanding my mind, expanding the listener's mind. And I'm really looking forward to learning more about your program, man. You've piqued my interest.
I love it, Jake. Thanks for having me on. It's been fun. It's been fun to hang out.
All right, man. Hey, take care.